Thank you for joining us this Friday, the 21st of November. I'm Sophia with Bell Direct. This is a weekly market update. Well, this week, the Australian share market dropped to a near 6-month low before rebounding. The benchmark ASX 200, which lost around $220 billion in cumulative value over the last 4 weeks, found critical support after a week of global uncertainty. Now, the drop was driven by mounting concerns over lofty technology valuations and a general global risk-off mood ahead of key US earnings. Now, rate-sensitive sectors, especially financials, led the slump, hitting a 6-month low on margin pressure alongside a sharp de-rating in technology stocks. However, the mood shifted following a blowout earnings report from US chip giant Nvidia, which eased the global fears of an impending AI bubble pop and sparked a major relief rally, which saw our local tech sector soar and the ASX 200 bounce back from its low. Now, while global tech drove the market swings, domestic economic data that was out this week provided some reassurance regarding the labour market's trajectory. The September quarter wage cost index report suggested that the labour market is not overly tight, showing overall wages rose by 3.4% over the year, while the private sector saw slightly softer annual growth at 3.2%. The easing aligns with the recent modest rise in the unemployment rate from 3.7% to 4.3% since late 2023, confirming the Phillips curve correlation in Australia. However, the clear challenge remains that unit labour costs, they grew by 5% over the year to end June, driven by weak productivity growth, just 0.1%. Now, for the RBA, this means that while the private sector wage picture is encouraging, high unit labour costs prevent any significant shift in the immediate interest rate outlook. Now, turning to the consumer sector, well, analysts at Bell Potter have provided an overview of the sector, highlighting the key theme, the divergence between staples and discretionary stocks. Now, following a pause in the RBA interest rate cuts, the consumer discretionary index lagged, underperforming the staples index by 9%. Now, staple stocks continue to show positive momentum. The key highlights include dairy inflation lifting 2% year on year in September, reaching an 18th month high, sustained growth supermarket spending from major players like Coles and Woolworths. Now, the New Zealand dollar, that weakness is also providing an FX tailwind for the A2 Milk Company. And the discretionary sector is showing some encouraging signs heading into the seasonal period, with non-food categories up 5% year on year in September. The Westpac MI consumer sentiment measure has risen above the 100 baseline for the first time since the tightening cycle began, which should be supportive for any upcoming trading periods. Therefore, Bell Potter analysts have made some rotations in their key picks, focusing on market leaders and exposure to a recovery in out-of-home consumption. Now, they favour stock picks that are exposed to out-of-home recovery, especially naming Bega Cheese, Woolworths and Endeavour Group. They're shifting their preference from Coles to Woolworths and Endeavour Group, citing more favourable growth profiles and the cycling of softer comparative periods in the near term. Now, in discretionary retail, well, high conviction areas including Harvey Norman, Universal Store and Accent Group, with ABY, that's Accent Group there, they've been added as a key stock pick to the list. Lastly, in gaming, well, the preference is for Light & Wonder over Aristocrat Leisure due to a more compelling growth and value dynamic. As for how the local market performed this week so far, well, Monday to Thursday, the ASX 200 has declined 0.95%, with technology, utilities and financials weighing down on the market the most, while real estate managed to gain 1.2%. On the ASX 200 leaderboard, well, the top performing stocks were Lynas Rare Earths, Pilbara Minerals and Liontown Resources, all making impressive gains. Now, Lynas Rare Earths advanced off the back of news this week that a global demand for rare earths outside of China. Meanwhile, uranium stocks were higher after the US Department of Energy announced a $1 billion loan to restart the 3 Mile Island nuclear power plant supported by President Trump to fuel AI data center growth. This advanced the share price of Paladin Energy this week, as well as other uranium stocks. And Liontown Resources was boosted by the 2-day gain in the gold price this week. As for the most traded stocks by Bell Direct clients this week, this included Transurban Group, Pilbara Minerals, CommBank, and Drone Shield. Clients also bought into Macquarie while took profits from ANZ, Wesfarmers, Westpac, BHP and Fortescue Metals. And the most traded ETFs by Bell Direct clients were the Vanguard Australian Shares ETF, the iShares S&P 500 ETF and the Vanguard Australian Shares High Yield ETF. And to end on some economic news items to watch out for next week, well, the latest inflation rate reading will be out at 10:30 a.m. Australian Eastern Daylight Time on Wednesday. Building and private capital expenditure data will be out on Thursday, and housing and private sector credit data will be out on Friday. And that's all for this week. I'm Sophia Mavridis with Bell Direct. Have a great day and happy trading.